we are within 6 months of the election. And if you do look at some of the polling and predictive markets, you're starting to see a rising probability that you could see a Democratic sweep. In fact, our political analyst, Ed Mills, has it pretty much as a toss-up between a Democratic sweep or the status quo. So I think it's an important topic to at least start to address for investors, because if you do see those corporate tax rates go up, it could be a negative or a headwind for equities going forward.
So that's really amazing, Larry. You say on the one hand, the top probability is a Democratic sweep. Biden wins, the Democrats take the Senate and the House. And on the other hand, Trump wins, the Senate is still Republican, and the House remains Democratic. Ron, you know, there are lots of things going on in the economy right now, but raising tax rates is not among the hot topics.
No, and I don't think it would be advisable this early on, Tyler. I mean, if you go back to when President Obama was elected, he ran on a similar platform of raising both corporate and individual tax rates at the highest end of the income spectrum, and then was forced to back away because we were in the midst of a great financial crisis and ultimately the Great Recession. And I think there's some parallels here insofar as, yes, it might be desirable to unwind some of those tax cuts that did not provide what was promised in the way of hiring, in the way of higher wages, in the way of capital spending, just stock buybacks, dividend increases, and the like. It may be advisable at some juncture in the future as we start to deal with deficit issues going forward, but certainly in the short run, and I suspect a President Biden might follow the pattern of a President Obama, he would have to hold off on that until we were certain that the economy was on a sustainable growth path for some notable period.
So, Larry, let's talk more broadly then. Let's talk about the market as it is right now and not about what might happen under a Biden administration and a Democratic Senate, because if the Republicans hold the Senate, most of those ideas about raising corporate tax rates would be DOA over there. Is this market vulnerable to a pullback in your view, or is it on firm footing?
I think over the course of the summer, you're likely to see a pullback of around 5 to 7%. But honestly, if you look back over the last 10 years, that's historically what we've seen during the summer, a drawdown of around 5 to 7%. You know, there's some catalysts out there. There's some political concerns. There's some tensions with China. We talked a little bit earlier about the therapeutic, if something were to happen there where there was a failure. So you could see some interim volatility. But longer term, I still think that this equity market's on solid footing, especially if the economy recovers starting in the fourth quarter, and if we do ultimately start to see some containment of this virus going forward.